James, motherfucker.
Alright guys, sorry I just had to cover my shorts. We're doing pretty good today. I didn't want to be in the market. I mean technically I could stay short. Let me turn this off, hold on. Fan's a little loud, doesn't like my... Alright, yeah, I was able to catch a short up here. I just didn't want to be in it while I was talking to you guys and miss it. So the short entry was pink bar, orange bar. Had the orange diamond, which got me a little nervous, but once we see another pink diamond, you know you're good. And so I could have held it, but we got through low day, and that was my target. So just another little scalp. I've had a pretty good day. I'm not gonna. We might catch another trade, so we'll get there when we get there. But yeah, nice to be up on FOMC day. I typically don't trade. I'm never in a position into the Fed, and I typically don't trade when he's talking, at least not with futures. I did throw out a lotto call, but it was clear it wasn't working relatively quickly, and I thankfully got out for a paper cut. But the potential was there for it. Here, I'll show you what I was looking at. So the potential was there for this low to hold when we saw this one hold a higher low, and so I didn't catch this because this was like before the speech, right? And then he started talking, and it looked like it was going to retrace. And so when it came back into this hold support, it kind of, you can't see it, but it dipped under it and started like bounce back up. And I was like, you know what? If this low holds, we're probably good, and if we lose it, it's probably done. So it's too big to take with ES, but I figured I can buy like 2 SPY calls, you know, and get like a lotto for Friday for like, you know, a $40 risk or something. And it went up just a tiny little bit and then rolled over and pretty much took me out right away. So that is the risk you take trading during any like Fed speaking, right? And yeah, I would never do it with futures products, but sometimes I thought I saw something that might turn out to be some sort of a trend reversal, and it was clearly rejected. And the important thing is that if you're going to take those shots, you need to get the hell out of there when it's not working. The last thing you want to do is get in here for a scalp and then see it reverse and then think like, oh no, the risk is too high, maybe I'll just wait till it bounces back, and like you're not getting out at break even if that's what you're thinking, right? Like there's way too many people in that same exact position who probably bought up here. So was it a high odds play? Not at all, right? It was a, hey, this might work, right? And the fact that we were getting so much range meant that if it did work, I'd probably be able to get out of it within a matter of minutes. And it just didn't work. But like I said, I'm after having a pretty good day in futures, yeah, taking a stab with a couple calls is about as YOLO as I'll get. Um, it was literally just a lotto ticket, because if it works out, it works out well, but when it doesn't work, it just fails right away. So yeah, I don't do that very often, but when I do, I try to share it because it's kind of fun. But I don't condone others playing lottos with like 2 days till expiration uh, options. It's not a good idea, but it's something we've all done it, right? And like I said, the reason why I thought it might be a good idea is because we had so much range. Um, wow, should have held this short, I guess. Had so much range that the potential for like a double up within like the hour was pretty good. And honestly, when it didn't work, the right thing to do was probably actually to reverse, because like I said, everybody who bought it up there, everyone who bought up here, was thinking the exact same thing. As long as the low holds were good, right? So, I might have gotten a good price on it, but like if that's where everyone's kind of determination point is right there, then when it goes through it, you know it's bearish, and so then it's just a matter of finding a short entry, and we had one on the algo, so I could have taken it all the way back there, but I wanted to wait till he was done speaking, and like I said, I didn't see. We had this one, but it had a diamond, and I decided not to take it because those diamonds are an indication of a volume anomaly. Now, sometimes that's a really good thing, but when it's if it's in the trend, it's usually fine, and that's something that, like up here, it was not clear to me that we were gonna trend down from there. It kind of looked like it was balanced. By the time it got to where I took the trade, wow, that was a killer one. Was here, and by this point, it's clearly in a downtrend, and so now those volume anomalies are actually a sign of strength. Well, for the bears. So, hold on real quick. Let me just make sure everything else on my other screens looks right. So yeah, I'm not in any positions at all. I tend not to be during like into Fed, so I don't have any swing positions or anything. But and they're just, the problem is when they go straight down like this, there's just not a lot to do. You can like one of the reasons why I covered this so fast when it took out the low day is that it's they are very aggressive trades. You're trading momentum basically on a pullback, right? And so this does not always continue. And so when you get those 15 points or whatever, it's hard not to cover it because you've seen it fail so often, and it was an aggressive move into momentum. So it's probably not optimal to cover it, but the last thing I wanted to do is start up the stream and then look back and see that I've given away my entire day. I thought I could easily scalp 15 points, but it turns out I could have gotten 100. That was a 100-point trade that I took for 15. So just goes to show that sometimes momentum does work, but this system is not built for trading momentum. You will occasionally stumble on them, like had I just shorted and just said, okay, I'm leaving my stop here and see what happens, then I'm up 100 points. I'm up $2,000 a contract. So it's since starting the stream, right? So it's not that you can't catch them, it's that you have to be more aggressive to do it. So this is the green bar up, orange bar down when it's really bearish is usually a sign of further weakness. Like buyers are trying to shift volume, but they're failing to hold it. Now, sometimes if we can get over this and put volume up above that, we could get at least some slowing of momentum. So we'll put a little marker there, and we'll say if the yellow line, which is the VPOC of each bar, if that yellow line can get back up here and get over that white line on a bullish bar that what's it called, Renko bar that closes bullish, it's a sign that whoever tried to add on to the momentum here is potentially trapped. So for now, there's nothing to do unless you want to just aggressively short the lows. We're getting into the low day of Friday, right? Is that Friday? Let me double check. I think so. Yeah. low a day Friday, and on NQ it looks like we've already hit it. On NQ, we're right at the voodoo range level. We're actually bouncing right off the voodoo range level, like exactly. I don't have them. Oh, I do have it on there. As I say, I know I didn't go too far down making like adjusting them, but look at that perfect bounce off the voodoo range level with momentum. Again, like that alone is not going to be enough for me to buy it, but that if I was short, I'd be getting out for sure. I'd be like, okay, that's a significant level. They're getting underneath Friday's low. They're trying to reject. Will they get over this? I don't know, but if they do, we might get a setup to the long side. So interestingly, we did not get a power bar flag on this. That's kind of weird, but we didn't get one. See these little purple flags? Usually the pivots show up with those, and the fact that we didn't get one there suggests that I might be wrong about this. That didn't get a pivot. That's really weird. It probably just means we won't take it. But that means the last power bar was all the way up here. So if we want to measure where all the... See, the problem here is that thinking about it from like a wave to wave, rotation to rotation point of view, at least on this time frame, the volume for this wave down is way up here. Now there is a spike down here, which is why at first I was like, oh, you know what, they might actually try to turn this. It's the little spike into the bottom. So this is absorption, this little blue arrow. It's not a buy signal at all, but it's a reason to kind of pay attention because they're selling, but there's buyers just like they're trying to sell it and they should need to use to get it any lower, they need to increase the energy that they use to push through it, right? So it's not a buy signal, but when they take it back, if they hold here, it's a sign that these sellers that they got absorbed and they tried again and failed to continue lower. So usually you break through them because it's just, sellers have control and you should always assume that it keeps going. But when you have absorption and then they trade lower, they trade above, and they come back and they're not able to take this low, if this low holds now, or if it's like touched below and trapped back in, that's the kind of spot where you might actually get a long. But technically for a trade-in perform entry, like the team I trade with, we need a power bar to get taken over before, or else we're being really aggressive to long here. So technically, longing setups down here is only for aggressive traders. And the reason that's important to specify is that you need to decide ahead of time whether or not you're going to be aggressive or if you're going to be more conservative or passive. Because if you're aggressive, you need to accept that your first try may not work, and that if then it sets up with the conservative play, you're pretty much committed to taking a trade. It's kind of like in poker where you have to decide early on whether or not you want to take, if you want to raise pre-flop. But if you raise too many times, you can get pot committed, right? Where you are now you've invested so much of your money into this pot that you're committed just to push all in. Now, it doesn't mean you should YOLO. The way the interpretation, the metaphor is it's not perfect. You shouldn't just push all your money in on that trade. But what I'm saying is that you've committed to taking the trade. The level, basically, you've committed to it if you were going to be aggressive on it. And so if you then got an opportunity to see a conservative trade, though, skipping that one would not make sense. And although it's hard to do if you were being aggressive, because then it means you're down one stop, right? So it's important to recognize, if I get long here, is it an aggressive play or is it a conservative play? Because if it's aggressive and then you get a conservative setup, you got to take it, right? Because you were being aggressive and it stopped out. So if you aggressively bought this, well, that would have worked technically. If you aggressively bought this star and then it comes back in, traps back in here, you have to buy that. You have to, because you were aggressive in the same spot. And so why wouldn't you take the more conservative, higher odds entry? So this is a valid entry. It did exactly what I said I wanted it to do, right? It got underneath this level. It found no more sellers. It was purple, and it jumped back into the green. I just wasn't fast enough to hit buy, otherwise I would have taken it. It has the purple diamond indicating that there's a volume anomaly there. That's okay because it's established support. That's not a problem, but it is definitely interesting. Um, we're right here at 11,000, so we shouldn't expect this level just to like. It should need some negotiation. Let's say it that way. It would be unusual for it just to take off here without coming back and testing 11,000. But that was a very, very quick turnaround there. So, like I said, if I'm short, I'm definitely looking for opportunities to get out. This is not what you want to see if you develop short. Like if you got short with all these guys that tried to flip momentum here, you need to be getting out now. Right, I have the voodoo range levels, and I knew as soon as I saw that there was a chance that they might turn it all around. But when they go lower and they trap back in, you don't really want a piece of this. You definitely don't want to be shorting this, in my opinion. Once they've gotten this trap back in and it's extended for 10 points, those buyers are actually winning. On the very, very small time frame, the buyers have an edge here because there's sellers trapped down here and they tried to push and found no new sellers, right? And then they shifted volume higher and got follow through. If you're short, you have to be looking at a much higher time frame. Now, if your entry was up here, like take profits, but you don't necessarily have to get out of all your runners, right? But I'm saying if you're trading this general area and you are short somewhere in here, you don't want to see this. You don't want to see them approaching your target and then finding a buyer, especially not in a purple pivot, which just doesn't. It's suggestive that the momentum is not as strong as the traders think it is. The traders coming into it thought they had high momentum, and now it looks like that momentum is slowing down. You can see they're trying to do like a inverse head and shoulders here. This is actually a good opportunity to get into the trade. Oh, fuck, I missed it because they pulled back into my entry. See, this anywhere in this green bars range is technically still valid. It did hit the first price target, so technically, I guess, from a trading performance view, it's not a valid entry. But from my point of view, my own personal point of view, I'm pretty sure that you can still buy this and try to take that 10 points again. I think. But like I said, my coach wants us to get the trade before it hits a profit target. And there's reason for that. So, but like I said, I've seen many times where this does actually continue higher. It's just this is the higher odds entry. Let's just say it that way. This is a lower odds entry when it went to a profit target, and which is like 15 points, and then came back into your entry and bounced. That'd be a little bit lower odds, but I see it work that way all the time. Notice they still have not gotten above this, so this whole area is technically still balanced, but all of a sudden bulls are trying to defend this 10,991.75 voodoo range level. I'm not going to ignore that. It doesn't mean it's bullish on the higher time frame, but it's meaningful because I've seen them do this before in similar situations where they have heavy momentum going down. They suddenly just get like they run into a brick wall, try to get underneath it, don't find any more sellers, come back in, retest it, take off. So now I'm tempted to actually buy calls here, but again, I'd have to immediately get out of them if they took this with momentum. So that's the problem. I can't buy ES or NQ up here because my stop would have to go with a low day. Like I could have bought it here, but I wasn't fast enough, and I technically could have bought it here, but my stop again would have to go all the way down here. So it was a little bit more. It was lower risk reward, but the likelihood that this actually does get some kind of an extension is high because of this move. And like I said, I wouldn't know that if it wasn't for the combination of the levels and the algo. But this is a classic trap here. Now notice we have now closed above a power bar, so we put in this power bar and this power bar, and they closed above it. So now bullish setups should work better. And you are technically shorting in the hole if you take a short now. Pink bar star down is usually bearish. I can't personally take a short until we develop volume or put the yellow line below that line. So we'll make it red. So if we can get volume underneath this, we could get a short setup, but it's deep, right? We're deep in the hole. What makes more sense to me, since there's 20 minutes left, is they retrace back to like maybe not. They're not going to get to the close of yesterday. Come here, cat. Come on. They're not going to get to the close yesterday, but they could definitely give some of this back. Oh, that's interesting. They only closed a pink bar above this important level. Only a pink bar, and the pink bar is a sign that price went up, but like volume didn't follow it. So it's there's basically just sellers pulling their orders, giving up there, and then they didn't get any follow through. So this might actually fail. If I would have gotten long here and I see that pink bar, I'm taking some profits. And now if they reject off this level, I'd be totally out of the trade. For a decent gain, I mean, you're getting in. I would have gotten in at, let's say 11,000 exactly. And then my first profit target would have been in this one, so probably 15, somewhere like that, right? It went 19 points. Pull back, I'd hold through that pullback. They'd come up, as soon as this pink bar printed, I'd sell another 2 or 3 contracts in here, and as soon as they rejected off of this important spot, I'd get out of my trade at 20, let's say 25, right? So I'd get 1 for 15, like 1/3 for 15, 1/3 for like, let's say 30 just to be conservative, and 1/3 for 25 for an average of 20 points. And that's usually how my trades go. And my average stop on NQ is 15 points. So as long as you can have a strong win rate, you can do just fine with an average win of 20 and an average loss of 15. Because my win rate's high. Currently, I believe I've got 100. Hold on. I probably won't take another trade, so it's not bad luck to share this. So I have a 100-point win rate, 100% win rate. I'm trading micros today because it's Fed. So the numbers aren't very good, but you can see 6 out of 6, not bad. And like I said, it could have actually been another $100. I could have gotten $200. I could have doubled that had I just held that. That short that I took on the way into this meeting, but that's okay. Oh, that's interesting. So they're trying to shift volume back up right into here. Let's see if this works. It probably won't, given this pink bar, but let's see. It's not bearish unless it gets the yellow line underneath this red line. This yellow VPOC line, the volume of the bar, needs to get below this on a bar that's not purple. Just like it needed to get up here on a bar that wasn't pink and close bullish. See, it did get it up here, but they closed bearish with aggression, which is what the star means. So there's an aggressive seller that responded to that. Now remember, we had this guy getting absorbed down here, right? And see what happened where they went underneath him, they came back up, they went underneath him and came back up. So that level is still important. I've already got the purple pivot there. That level is important, not necessarily to hold like to the tick, but they need to find responsive buyers underneath that. Otherwise, it suggests that this guy absorbing is finished doing so. We had an arrow to the right that's blue on a bullish bar. In a bear trend, that's usually not that important, but when you do hold it, that level, it's at the same level basically, but that level becomes significant, and so it makes this buy a little bit better. I could have taken that. I just hesitated. I did not work that out. But this was definitely a good buy. Like I said, I just didn't like how it was already gone like 20 points. I wasn't sure if it was still valid, but when it closes as a star, you can be pretty sure it is. Remember, all the volume for this big wave down is way up here. So it just floating back up to return to the where all the volume was. I mean, there's a big chunk here, but it's whoops. Oh boy, I fucked that up. But there's a bunch here too. So now here, let's spread it out. Let's see where we're going now with this whole thing. See, we've shifted volume down, right? Even before we started dropping, we shifted volume down. And so now the volume point of control of the wave that started here all the way to here, where it started turning around, that volume point of control is here. So that is basically, and that's where we are right now, right? We're trying to find support at where they put all this volume in because they did get buyers above that. So buying a star or a green bar or a diamond here would be a little bit dangerous, but it's the same kind of trade that I took with the calls with, because as long as you're okay with it coming back on you and you're not gonna like blow up your account, right? The chances that they hold this are higher. Yeah, but unfortunately, if they do give it up, you know you're done. So the fact that you have that line in the sand, it's just a matter of managing risk appropriately. The hard part with the trade like that is, let's say this was a star. If they trade just a little bit below the star and then they pull back up again, you're gonna be again committed to taking that trade again if it triggers. So you kind of have to decide ahead of time like what level you need to see and where your stop would go. Because like in this, let's say there was no algo signal here. This is actually a sign of weakness, but let's just say the pink. But let's just say it was a star and I bought it. If I put my stop right under here and now I see them coming back at it, you don't want to move your stop. But if you see them trade below it and then they immediately find a buyer again, why, if it triggers to be buying again, why wouldn't you buy again? Because it was good here, why wouldn't it be good there, right? So it's just a challenge that you have to kind of decide ahead of time. Am I going to take this trade twice? And if I can't, but I should, then I should skip the first one, accept that it might go without me, but if it does it again, take the second one. So I didn't take the first one. So if it can get underneath this and then bounce right back with now it would need a star. Technically, it did not get a star the first time, but look, it did. It has not yet traded underneath that low. It's close, but it hasn't done it. See that? Oh, did it by a tick maybe? Well, now it has. So now it's gotten underneath it. Let's see if they bounce back up. It's got to be within a bar. If they get down to here and close it, the very next bar can't break that low. Well, it can't close bearish. But if they bounce back up here, we can take a stab at it. What time is it? Fuck, it's 4 minutes till MLC. That sucks. The timing is not ideal. So once we close, I'm going to go back and we're going to review what the algo, like, what triggers the algo gave during the day. I've got ES down here too, and we can look at that if people want. I primarily trade NQ, so my focus is on NQ. But if people are interested in ES, we can look at ES. It's been working really well in ES. So it would probably if I was trying to advertise how good the algo worked, I would look at ES. But I've been watching NQ because that's just the market I'm used to. But yeah, ES has been working well. Okay, so now we're trapping under this one. Oops, I can't get it under there. We've gone under the low, right? And they're trying to get below them. Unfortunately, I can't take this trap because it was the low of day, and the low of day trap only works in certain scenarios, and this is not one of them. Because the wave to the low, wait, oh, I might be wrong. Fuck, I didn't see this. We got this. So the wave to the low is here. It might not matter. This is the wave to the low. We got volume above it. Oh, that makes this a really good play. Shit, I should have bought that for sure. I didn't. Okay, that's frustrating. So it did get a, it was just delayed. It wasn't here, it was here. For some reason I was looking, I don't know what happened there. Was it delayed? I don't know what happened there. Anyway. Okay, so I'll figure that out later. But I'll have to rewatch the video and see what happened. If I just missed the fact that there was a flag right here. I think I was looking here and expecting the flag, and it was just a little higher. And I just didn't look. I literally didn't see it. Or it might have been delayed just a little bit more, because usually it comes in 2 or 3 bars. It's the only one that's delayed, but it depends on so many factors, and it needs future information to print them, which is fine because we don't use them as actual entry signals, but we use them to measure extensions and find traps later on. So when we get the volume point of control into the low, when we get it low down like this, and then we break over it and come back and print a star, it's actually a really good entry. So this, you could even get long up here and put your stop down here. And that's actually a consistent entry I knew, but didn't measure the wave correctly. And then on the way up, I could have just looked. See, you're supposed to look at these waves, and I just didn't look at it right. So on the way up, you can see we did a similar thing. We have, God, this setup is so cool. It just takes a little bit extra focus. So once it trades below it, comes back, and prints a star, it's usually a good sell. In this case, you had to be willing to take it twice, and it re-triggered with an orange bar. That was a valid entry. Damn. I totally missed it. I mean, it's okay. It's the end of the day, but that's something I need to practice doing a little bit more. We'll look in the review. We'll measure some lows and see what we can do. When it comes to finding those. Okay. I'm not going to trade in the close, but if I was long, I'd be nervous because now ES as well has traded under Friday's lows, and Thursday's lows are likely where the bears want. Like the sellers want to see what's going on underneath last Thursday's lows. Here, I'll show you. On ES, buyers don't want to commit until they see what happens down here when they test underneath Thursday's low. So this area, 37.58 to 37.45, let's say, 45 to 55 maybe, or 58. That whole area is really important. If they can hold 43, let's just say 40, it could bounce. But you can see that volume was biggest way up here, and then they've decreased volume as we drop. So some sort of a retracement is likely, but you can't just buy because you think it might retrace, right? Like there is momentum here. Look at how hard it went through that purple pivot, right? And then couldn't even reach it. So there's serious momentum in here, even though volume's decreasing. You don't want to fight this move. You really don't, not now. But if this gets tested under by like just a couple points, like 20 points or something, and then we bounce back up within like, I don't know, a 2-hour period, let's say. Like, what if we test under here, we close the day right here, after hours, we trade just a little bit lower and then bounce, and we open the day back up above 3,800. That's basically what bulls would need to see to turn this around. Otherwise, what we're looking at is just a longer term bear, right? Like it's just a retracement, and now that we have a lower high, it can dump. But you can see that's why this level is so important. Now there are more levels down here, and so this whole area, is technically neutral. So we could come all the way back to 37.46, like I said, and bounce, and it's still not bullish. It's just neutral, right? To get bullish now, what we need to see is higher highs and higher lows, and so that means this will have to hold, which I doubt will happen. So let's say we trade lower, we're going to have to go higher and then higher low, and then most likely dip and go, right? It's a lot to ask. I really want to be bullish because like it's easier to trade to the long side, and like I'm biased in the sense that I prefer trading days that aren't straight down. And when it's bearish, you get a lot of trading days that are straight down. Sometimes you do get lucky and catch that, but like what happened before I started the stream, I got the signal. It's the exact same signal as this pink bar, orange bar with a volume anomaly diamond, and it's bearish, right? It's a bearish signal, but you don't know whether or not you're going to get 10, 20, 50, 100. You just don't know. And your stop has to stay back here because, as you see, like if you try to take it out early and put it to break even, you're gonna get smoked, right? So if you don't understand what I'm saying is, if you got short here, that's where the signal is, and then they go down. If you don't take profits and instead you treat it like a momentum trade and you're like, okay, I'm going to move my stop to break even. Well, break even, remember, you got short here, you get your stop gets taken and then it dumps. So the only way to do this with futures is to leave your, in my opinion, is to leave your stop above the bar. Let's just put it here so it's out of the way of the purple pivot and I don't accidentally erase the wrong one. You leave it there and you take some profits as it's dropping so that the times when it comes all the way back, you don't lose a full R. Now that means when it rolls over like this, you have to decide what you're going to do with the remainder. You can just hold it as long as you can, or what I say is once you get a second rotation, so here's the second rotation, right? Now, in other words, like it went down, it retraced, it went down again. Now I can move my stop. Okay, not the first one, not here, but here. And if I wanted to move it to break even now, it's okay. Like if that wasn't break even because it's not, right, then I could move it here and probably survive if it stays bearish. But you can see that it's arbitrary. That's an arbitrary spot. It's not a perfect spot for a stop. Psychologically, it feels good if you got short here, but it doesn't technically make sense to put it here because if it's bullish, it's going to hit it, right? And if it's bearish, it could hit it and then reverse before it gets back to this one, the actual like pivots. So the flags here are like the visual pivots that most retail traders put their stop behind. I'm not saying that's where you need to put your stop, but is where most of the stops are. So what tends to happen is the market gets attracted to those. So putting it just a couple points be like in front of that might save you some money when you get stopped out, but it also means that sometimes it's going to come back and it's going to approach that stop and it's actually not going to go any higher than this pivot, but it'll take you out. That can happen, right? But you can see that putting it behind the, like any pivots that happened recently are going to get hit. This one won't because, like I said, there's a signal here of a momentum shift and a volume anomaly, so that they're going to have a hard time coming back to here, which is why there's that inefficiency. That's why it is an entry, is because we know that this level shouldn't get touched, and if it does, it should get rolled over. We should see a rollover, and if we don't see a rollover once that level gets touched, we're wrong about it being bearish. Oh, interesting. ES got to, this is in the wrong spot. Hold on, I gotta fix this. ES got to the voodoo range level. I just didn't adjust this far because we've dropped quite far. 37.6850 is the voodoo range level this week. Do we have the next one? 99, is that right? Nope. 90.75. So I haven't adjusted these because we haven't gotten down here. 90.75. And then the one after that is 13. That one I adjusted. Okay. So they came down to the voodoo range level and they found a buyer. Let's see. And we're kind of at the midpoint between these two voodoo range levels on the on NQ. And you can see that we're trying to jump off this purple pivot. But that's really not very common when you're what's it called? When momentum is increasing. So if we bounce here, then momentum to the downside has significantly slowed, then we're probably going to go into like a consolidation. If we break through that purple pivot, which is like right here, I'll put it on the chart. It is 61 to 1101. Oh, it's already there. It's this purple pivot right here. It's already there. So we traded through it. We retested the low of Thursday. I think Thursday. Mm-hmm. Retested the low of Thursday, got the sell signal, got 2 more rotations down. So if you are wondering when can I buy this, right? If you want to be bullish and you're scalping, now it's the end of the day, so you wouldn't do this, but these purple backgrounds here provide some opportunities if you can get the yellow line above them on a bullish bar. So you can see this one just missed. So the yellow line went above it. It's not on a bullish bar. Got a bullish bar. Now it's pink. Those don't count. Pink and purple bars are not bullish bars. They close to the upside, but they're not a sign of bullish momentum. And then you get a rejection of the level. So this is clearly bearish. And again, that when it's bearish, those pink and purple diamonds, when the momentum is directional, those pink and purple diamonds are, as long as you're taking them in the direction of the trend, are actually pretty consistent. Because it's a sign that you have some sort of an anomaly in the volume, and that anomaly in the case of momentum, when there's momentum in the market. Let me just double check and make sure everything got cleaned out before I get. Yes, so that is covered. Hold on, I'm just checking my accounts to make sure I didn't accidentally leave something open. Okay, good. Nothing open. All right. Good. So I end the day up 206, or I think it was like 190 after commissions on the futures account, but down $80 on the options account from taking, just because I took that lotto ticket. So a green day, like I said, that the smart thing to do would have been to flip and get bearish when the bull didn't work. So, I was saying, yeah, if you can get the yellow line over the bar that has the very first purple background in a series. So like now it's here, the very first bar with the purple background. If you can get price and volume to develop up here on bullish bars, it can reverse. Without doing that, it's probably still bearish. So another interesting way to set, if you're trying to figure out where to put your stop and you don't want to use like traditional pivots, what I could have done is, remember I shorted here. I saw the short here. We didn't take it. It was the end of the day. But that was the short entry. Initially, stop goes up here, right above it. Once you put in this purple background, you don't want to move your stop yet, but if you try to take it and you reject it, usually putting your stop a little bit above this, once this low gets taken, and this arrow is reminding me of that if it's bearish, and a bar with a blue arrow like this, if it's bearish, right, this only works when it's bearish, the bar with a blue arrow gets traded underneath, then this level becomes like a potential pivot to the downside if we return to it, right? So now I can move my stop all the way down here, above this first one that's got a purple background, because that happens as soon as we trade under this guy. So right there, like the close underneath it, stop goes there. Now when they retrace, the likelihood that I'm going to get hit is pretty low. And you can see that they put in another purple background bar that was not followed by a purple background bar. Now we did not have another pivot, likely future pivot, which is the arrows. So, but once they trade under this bar, which happens here, your stop can be moved to here. And that's how you trade momentum with this. Now, keep in mind, the entries that you're taking will not work if it's not bearish, right? You're taking aggressive entries. These like purple bar followed by a sign of aggression, or pink bar followed by a sign of aggression. That kind of pattern, that what we call a 2-bar combo, they work beautifully as long as you have direction correct. When you have direction wrong, they will almost never work. So you have to be a little careful. Sometimes it's more obvious than others. This was, in my opinion, clearly bearish. I knew it was bearish as soon as this. See the pink background, it's the same exact rules, only in reverse. It's the inverse. So this is a sign of bullish aggression. Here, let me get rid of all these extra things. So this, we'll go from the beginning in a minute, but I just want to show you this because this concept continues to repeat. So again, pink background means that there's bullish momentum and people are putting a lot of energy in. That's bullish if it happens at the lows, but bearish, potentially bearish, if they top out there. You don't know for sure that it's bearish until they trade underneath the bar with the pink background and they get the yellow line below it. Sorry, these fighter jets are flying right over my... I live by an Air Force base, so I get used to it. But this time, like between 12 and 2, I'm in Vegas, like they fly over this constantly. So I apologize for the extra noise. If you guys can't hear me, tell me, and I'll move the mic. But so yeah, once you see that pink back, if you're okay, so let's say you're here and you're like, okay, what if this gets bullish? Right? We were talking about it like live. I said if it can get up here and it can hold, it might start to get bullish. And so then you see the bullish momentum come in and it's like, oh, yep, they're trying to do it. And then this is your first aggressive short, right? It's a 2-bar combo, pink bar followed by a star to the downside. It's the same entry as this, right? And so, and the location's good, but you're fighting this momentum. So it's really aggressive. It is bearish though, right? So it's not a bad move. It's just aggressive. For me, I'm a little bit, especially to the short side, I don't trade that aggressively. I want to see this yellow line, which is the volume of the bars, the VPOC of the bars. I want to see it trade underneath the low of the first bar that had a pink background. So where the momentum started, I need them to develop volume below that. Usually, I will get an opportunity to short after that happens. Now look what happens here. They get price, the bar closes, bearish down here, but look where all the volume was. It was at the top of the bar, inside of this momentum push. I don't want to short that. Definitely not. I want to wait. Okay, they give a star down. Now, they got underneath it, but it was on a purple bar, which is not so strong. I need one more bar that's bearish to get down there. And you can see that this is your next aggressive entry, where you have pink bar followed by an orange bar. It's the same entry as purple bar, green bar, the other way around. It's the same exact thing, just bearish. Pink bar followed by orange bar. But notice I have not yet gotten that yellow line underneath the orange. I'm sorry, underneath yellow line, underneath the pink background bar, this white line here. I've not gotten, when the yellow line got below it, it was either purple or it was a bullish bar. So it's not confirmed that it's bearish yet. So that making this a very aggressive move, right? Now it's confirmed. We've got a bearish bar with the VPOC, the yellow, below this bar. And at this point, any retrace should be shorted. So you could get short on that bar when it retraces, but your stop needs to go here. That's the conservative way to trade momentum, right? And if you got a retrace into that area up here, you could sell it again. But then from there, you get another. And now that you know it's bearish, now that you know it's bearish right here. Let's say you didn't get that. You saw it, but you didn't get it. You're like, damn, I missed it. That's okay. Wait for an aggressive entry. Pink bar, orange bar. Aggressive short entry. Your stop goes here. Okay, cool. You get paid. There's nothing to do, nothing to do, nothing to do. When are we bullish? If they can get... It's the exact opposite of when we were bearish up here. They have to get the yellow line. Oops, that's the wrong side. Get the yellow line above the high of the bar with the purple background, the first one, right? Doesn't happen. Pink bar, purple diamond, volume anomaly following sign of weakness, short. So like you could literally do this all day as long as you knew which direction we're going. So let's see how you would do. Give me a minute. I'm going to run as long as they're still flying over me. I'm going to run and grab something to drink, and then I will be right back. Give me 2 minutes. I will return shortly, and we will do the review. I'll leave you guys with some music here.
It's Jesse James, motherfucker.
As he said many times, in many parts of this nation, those he touched and who sought to touch him. Some men see things as they are and say why. I dream things that never were and say why not, why not, why not.
Television controls people by bombarding them with information until they lose their sense of reality. Now, television itself has become the new religion.
put the screen back up. Welcome, guys. It is FOMC day. We'll post FOMC November 2nd. We're going to review what we saw going into the day, see if there were any opportunities throughout the day, which there were. And then I can also review some of my decision making throughout the day as well. I did okay today. I did not take a lot of trades. I traded micros because it was Fed day. So 100% wins, just 6 trades, about $200. So I mean, it's, you know, it's just another average day, right? And the important thing for me is that I've managed risk. I did take a little lotto, but I didn't do it with futures. And like I said, I'm allowed to do that every once in a while in my swing account, especially since I haven't really been getting up many opportunities over there in the options world. So yeah, if I want to throw $100 at something every once in a while, I give myself permission to do it. The opportunity was there, it just didn't work out, and I manage risk, so that's what matters. So let's go back to yesterday night. So this is the 80 tick. Well, first of all, let me just show you where some of these lines come from. So if you weren't looking at today, if you didn't know what was going to happen today, right? It was yesterday. What we saw on the profile was that we had some important levels down below us. This is NQ. I could do the same thing in ES if someone wants. I'll do ES, but like I said, I don't have it marked up like this. So it's because I primarily trade NQ. So this one will have many more. You'll see the confluence, and I think it's really important to identify that, like, it's not just about reading the algo, and the algo tells you when to short and when to long, and it's like easy, right? It's not, unfortunately, it's not quite that simple. You need to know where you are in the chart to be able to determine whether or not this is a location that you should be getting long or short, and then the algo helps you execute and time your entry. You already know, before you're going to push that button, you should already know that this is a level that I wanted to get long, right? Or that this is a level that I plan to get short. It's just a question of, do I do it the first time it tests, the second time it tests? Do I need to see it do X, Y, Z first, right? That's what the algo helps me with. The algo doesn't just, I don't just do what the computer says. If I could just, I don't just automate it to like trade whatever the algo says is a good opportunity. It's not that sophisticated, but it does a great job at reading the footprint for me, so that I don't have to pay attention to that. And all I have to do is just make a decision in my plan where I'm willing to execute trades, and then just wait for the algo to tell me what to do at that location, right? And then if it says do nothing, I do nothing. Sometimes I don't follow the algo's instructions, and usually I miss trades or make mistakes when I do that. So I've begrudgingly learned that doing what the algo says, as long as it matches my plan, is usually the best course of action. Because if you don't do that, what ends up happening is when I go back, even if I make profits that day but I didn't follow the algo, when I go back and review, and I want to see which setups are working or whatnot, which setups aren't working, I have no evidence for that. So every day, what I've talked to people about this before, but in the room, but I think it's important to remember that our trading profession, our career as a trader, whether or not this is your primary career or second or whatever, your career as a trader, you need to look at it as a big picture, not as it's built from every single trade day built together, but it's over a string of days, and each day is a string of trades, right? So while it's important to make money today, the truth is you're not going to make money every day, and you're not going to know which days are going to be the ones with the best opportunities and which ones are the ones with the worst opportunities. You just won't know going into the day what's going to happen. That's why we get paid for doing it right? So it's important not to get too hyper-focused on the results of any individual trading day, or especially any individual trade, considering that what we really care about, what you should really care about, is to be consistent and find a way to execute trades in such a way that you can anticipate what your results will be over a long period of time. In other words, I can't tell you whether or not tomorrow is going to be green or red. I also don't know whether or not the next trade I take is going to be a winner or a loser. But what I do know with relatively high confidence is that as long as I follow my plan and I follow the process that's been back tested and I know works when I do it right, I can be confident that over a string of trades, and especially over a string of days or a string of weeks, that as long as I continue to follow that plan, my equity curve will continue to increase. So once you get that confidence about the process that you're running, if you can stop worrying about whether or not this individual trade will result in a buy or a win or a loss, but instead focus on, I want to keep taking as many of these type of trades as possible so that I can produce the results that I've seen in the back tests. I want to realize that. And if you take the trades and you're not realizing those same results, then you've gained information that you can then go back and review and decide, is my execution wrong? Am I not reading the algo correctly? Or B, am I choosing the wrong locations to read the algo or the direction? Am I not confident enough? And then what it usually is C, which is whatever. Well, usually it's I'm not following I'm not staying on process. That's the number one reason why my trades are usually not working. But there are times where, what I was going to say is there's plenty of times where the trade doesn't work, but it's working within the realm of error, right? Like it's working often enough that it makes sense that it would fail sometimes, because in the back. So let me give you an example and make more sense. Let's say you've got a trade that you back test and it says, if you follow this trade and you take it every single time, you'll be right 72% of the time, right? And some of our setups have about that win rate. When you go in and you lose, you take that trade and it's a loser, you have to ask yourself, is this normal, right? If I'm following the process correctly, did I know ahead of time that the results will sometimes produce losers? And the answer should be yes. I should have been prepared for that. And then you can actually look and say, well, over the last 100 times I've taken this trade, or maybe the times when the trade set up, how often did it lose? And it's like, oh, it says it lost a little bit less than 20% of the time, right? Or 30, a little bit less, between 25 and 30% of the time. So it doesn't make sense that I might take that trade 2 or 3 times in a row and both of them or all 3 of them fail. And the answer is yeah, that's going to happen sometimes, right? If you take it for weeks and weeks and weeks, every single time it sets up and you're not, and they're all failing, you're probably doing something wrong, or the market is completely changed and whatever you did your back test on is no longer, past performance is not indicative of future performance, right? So there's always the chance that past performance that you use as a backtest is not a good sample compared to what's happening now. But if you're so over-focused, what I was trying to get at is if you're so over-focused on what's this individual trade going to result in, you really do risk not executing your plan properly and then not realizing ever the high win rate that you could be getting if you just execute the trade plan over and over and over again like a process. So part of that process is building the levels, and the levels are built from the profile. So I have my own what's it called, like color coding here, but generally the yesterday's point of control is always blue with this dash, dot dash here. That is an area that I generally do not want to execute trades in. I don't want to enter. It's a good target, but it's not a very good entry. And what you'll see is around that area, the algo will fire aggressive signals that say that people are trading aggressively, even though there's not a trade opportunity. So it's a time where the algo, if you looked at when does the algo tell you to do something that fails, one of the spots is when it triggers in the trade, in the point of control. So if I want to pick a spot just to avoid trading, it's that. Anything around there, I just want to avoid. Then if I want to find the places that I like to trade, what I'm looking at is where in the like reasonably near future has the market either developed some sort of an anomaly. So an example of anomaly would be like single prints, or a situation where you let's see, this one started way back here. Let me see what this anomaly is. So this anomaly started, it was the edge of this distribution. So see how there's like a bite out of this profile, right? And there's very low volume there. And then there's a bite out of this profile. And then the profile just ends right there. All those levels line up. And then recently what we saw was look below and fail. Look below and fail. So is it reasonable to think that if we get an opportunity to trade 11,200 that we might get a reaction from it? And I'd say yes, it's reasonable to think that. If we trade underneath 11,200, 750, would it be reasonable, or whatever that is? It's not 11,200, 750. That's this previous low. What is that level? If we trade below this, why can't I? There. Below 11,230, let's say. If we trade below this, and then we come back, and see, this is down here, we have some single prints, and then we come back up and we reject out of it. Is that bearish? Yeah, and we should probably expect the algo to set up at least once there, right? So that's what. Oh, and then the red outline with the green inside, that is low volume nodes. So you can see here it's like a little area where there's very low volume in the previous session or sessions. This one was back here, and you can see that they partially filled it. So technically I can, the rule is, if I would have done this right, I would unlock it and then adjust, make it smaller, like that, and then relock it, because we've partially filled in that volume there. The red are previously trapped traders. So when they trade up and they put some aggressive moves in and then they reject out of it, that becomes trap traders. And you can see it looks like excess on the profile. Technically, I could have put one here too, but you can see that it lines up quite close to the point of control. So I deleted it because I didn't really want to be taking trades near the point of control. I could technically delete this one too, but I figured if we go lower, that could be a good rejection point. If we would have gone higher, I could have technically left that and see here. We'll put it in there. It would be trap traders. Right there. That's close anyway. So whoops. So there. Why won't it let me go here? Hold on. I got to get the other one. Sierra chart is not very user friendly. You got to do this in the order they want you to do it. Okay. So, and you can see that created a B profile yesterday, right? Looks like a lowercase b. Oh, whoops. And then the volume yesterday looked like this. We have a low volume node here too. Oh, so these guys got filled in. See that? That's why I deleted it, because they got filled in. So, did it? I mean, we can leave it on there and see, but generally once they now it's become a high volume area. See that? And it used to be excess, and they filled it in and put it. So we'll see. Sometimes one more day is okay, and then let's see this one. This little volume node's from over there. You could technically put another red one down here, but I won't. And then, like I said, the orange are previous lows. So, and then purple are the purple pivots. So that's where all those come from, right? And that's what I do in the beginning of the day, is I make sure that I have all those things adjusted, because otherwise my trade locations are going to be off. The other thing I'm looking at is the voodoo range levels, which are the purple dashed lines here. So those voodoo range levels are levels that I find every week. They don't move until the next week, and they are areas where I know that the mean reversion algos that kind of run the show are gonna look at to determine whether or not they want to be involved in the market or not. and I can watch them and see if there's a reaction there. I might want to look for, like, this would be a good example of getting a reaction off the Buddha range level where we traded under it, but we're not able to, like, they put some aggression into the low side and then they gap back up. Like, that kind of a move is like significant in that area. So once, like I said, the first step is to go back to the profile in the morning, make sure that, or whatever, in this case it was for London, but before I start trading, make sure all my levels are in the right place, because I need those levels to be in the right place in order to make good decisions, right? Then I'm going to look at the bigger picture. So if this was yesterday, I would be looking at this. So this is the 80 tick, and so it takes 80 ticks to fill one of these bars if it goes in the same direction. And if it goes in the opposite direction, it's got to retrace half of that and then go in the other way, right? So the result is that each one of these are very, very large. So you've got, like, the biggest one, 45. So like 50 points, let's say. On the smaller ones, we're looking at maybe 25 points. So one way or another, these are going to be very, very large bars. Too large to trade off of, right? Unless you want to have a 50-point NQ stop, which doesn't make sense. You can do it with options, I guess, but it doesn't usually make sense to trade that way. You can't really trade off of it, but you can still use it for analysis. And so before I start trading, what I want to do is I want to look over the last day and see what happened. So Wednesday, I traded London. And so what I looked at was, what did the high look like? What did the low look like? And were there any areas that aren't already marked from the profile that I can tell from the algo that someone might have gotten trapped, or that momentum might reverse if we get past that point, right? So here is the regular trading hours on Tuesday. So what we saw happen was, I'll kind of explain some of these signals as we go. You don't have to worry too much about how they're produced, but just know that, like, the combinations of them, and certain combinations of them, or seeing them in certain spots, give me potential trade entries. But like I said, on this chart, I wouldn't necessarily be able to execute that because my stop would be like 40 to 50 points. So I'm just doing this for analysis. But like I said, understanding what they mean helps with that. So as they were moving up on, let's see, this is Tuesday, right? So Monday night, you can see they put in momentum, the pink background, way at the top of the move, right? They got into this, I think it was a previous single print as green, and then they weren't able to get volume above it, and so they got this volume anomaly that then rejected right through the low volume node, right through a second low volume node, and right through the purple pivot. So once it got here, technically here, where it's not a purple bar, but it's getting the yellow line underneath below where this pink started, the momentum shift. Once that happens, I know I don't want to be a buyer. And I realize that in this case, that would be a very big time. You'd have to wait. Here's where the first aggressive opportunity to short was like 575. And I'm saying you really don't know for sure until this bar prints, which is more like 452, right? So, like I said, you're not zoomed in enough to make trading decisions. But if I was just trading on the smaller time frame and watching this, and I see them rip through these low volume nodes and the purple pivot without any retracement, and then they actually take out these guys who came in late with momentum to the upside, they trade under them, put the VPOC below it, and close the bar bearish without it being purple. Right there, I know all that combination. As soon as this happens, I know I'm not looking for longs anymore. So I'm not going to be buying traps. And a trap is this. So I'm not, if this exact pattern where you get a flag or an apex, trade under and come back up, right away in one bar, I would not take that if that showed up now. This one worked because you didn't have these conditions, right? You didn't get underneath the pink background recently. They didn't trap all these guys who pushed with momentum. In this case, it was a bearish move to the low and then a neutral consolidation period. So whether or not longs or short, whether or not you're long or short, both of those should work as long as it stays neutral, right? Well, here it was bullish for a couple bars. Here it is definitely bearish. So now even the best setups like the trap, and especially the aggressive setups like pink bar, or no, purple bar star, purple bar green bar, triangle down followed by green bar, all those 2-bar combos, all of those are out now on the smaller time frame. So if we zoomed in here on Tuesday to 9 o'clock, here, I'll do it. What you'll see, whoops, I don't want to look at the mushroom. What I'd see, most likely, is as soon as this occurred, which is right there, right here. So that's where it closed, 11:55, 55, right there. So once it got to there, I now know if I was looking for longs back here, like if I tried to buy this trap here, right? Like let's say I tried to buy this, because I'm like, it might turn around for some reason, even though it's not bullish. Let's say I bought this and I got 10 points, then it rejected. And if I'm like, do I want to continue to try this, right? Should I keep buying? As soon as that 80 tick puts a bar that's not purple underneath the that momentum zone, that pink background zone, and the volume goes down there too, I'm not buying anymore. So now what I would expect is that shorts will start working on this time frame, but longs will not. So let's see if that's true. So here, I'll get rid of this. Here, let me get rid of my lines, because that's kind of unfair. I've got additional lines on here, I think. Well, maybe not. So this is, which one is it? 11,500. It's this one. Okay, so as long as we stay under this, more or less, it's bearish. So that's a short. Pink bar, orange bar. Triangle up star, triangle up diamond are pretty aggressive, but that's technically a short too. So I'm not. So here's the trap. Puts in a low with an apex, trades below it, comes back up within 1. I'm not buying that. Some in the room are. I'm not. I'm going to skip that one, right? And, I'm not saying it's not going to work, but I know because the 80 tick signaled bearish, that the chances that this actually gets up here is not very good. So it might get you 10 to 15 points. It's not going to do you much good after that. Rather than taking this, so I will skip this one, and instead I will take pink bar, orange bar. I'll take this one short. I'll skip the long. I'll take that one short, right? And it's just a lot easier for me. Okay, so now, hopefully that makes sense. I think that's, and look, we've just now, like you can hear. So look how we knew up here, right? And again, it only looks like 1, 2, 3, 4, 5 bars, but we're talking, I mean, when you look at this, it's 11,475. So like, it's this whole area. You can stop fighting the trend. Are you going to miss like this rip? Yeah, you will, But what's cool is that if you get like a supernova, like this is a new setup. So they put in an apex, they close above that apex. Okay, now if this low would have held, any trap will is good to go long. It didn't hold, right? Now we have to take it again. We have to do it again. We get over that. So now any trap to the long side can be bought. And and aggressive trades can also be taken. And I don't want to be taking pink bar star to the downside, because we've put in a low and we've gotten over the apex to the low, right? So the long would be here. It didn't set up very well. Purple bar followed by a pink diamond just suggests that there's a volume anomaly there. It's usually not good enough for me to be convinced that there's a reversal. So, but I would not be taking shorts here. I'd be waiting for the long to sit up. There we go. So this diamond is pretty good. It's only a 1 bar algo, but that's good for a scalp. And let's see if they can hold this low. So I'd miss this. I'd miss this because they're breaking over power bars here. So I'd probably miss that. And then if I held runners, they'd be taken out, right? Okay, we trap underneath. I'm probably not taking that. It's the low of the day, right? Now that I've gotten under this, right? Now I can start thinking about shorts again, but I really don't want to be aggressive and take it here. I want to take them up here. Why? Because that's the previous support, so I would expect that to be resistance. That's my own personal style, but you can see that this one did trap back into the long side. I'm missing that. I'm just not aggressive enough. And now they are rolling it over. Pink bar, star. That's your opportunity to get short. And you can see that they don't all work. If you did it way down here, pink bar, orange bar, you get beat. But then if you're going to take the aggressive one, you have to take the conservative one. Pink bar, orange bar, and you get some of your money back. And then stop out on runners. Now we're breaking over power bars, right? So now if we get a trap, look, we got a trap right here. See that? So we put in a low. We broke over a power bar, right? And now we trap back into a low. So that is a buy. Now, this is still Tuesday, so let's go a little further. But that's just an example of what we'll do with Wednesday. That's what we did yesterday, right? So we went down, continued lower. Let me just get rid of this arrow. It's bugging me. Okay. We put in some volume here. That's where the volume point of control came from. We closed all the way down here, right? Now, when we opened back up, notice when we closed, we put in aggression. That yellow star is a sign of aggressive sellers. So we put in aggressive sellers at the lows at the end of the day, right? Not necessarily anything, but something to watch, because when you open the next session above them, all those guys are potentially trapped. This arrow here says that this level is potentially support if we can trade above it. And again, that's on the 80 tick. It's too big to trade. So let's go back to what it looked like Tuesday night. Here's the close. All the way to the low, right? Puts in a low, a new low. It breaks a power bar. Breaks the apex to the upside, right? This is the wave to the low. We've broken above an upside apex. Apex to the upside. They come back to yesterday's point of control and reject. I'm not going to short that. I don't want to take trades near the point of control. It's just a no-no. And now what I want is a trap. The very most aggressive way I could trade this would be to take purple bar, green bar, but it's right into the point of control. Did I do it? No. Did it work? Yes. Purple bar, star, same thing. Very close to the point of control, would be very aggressive. I didn't take it. It did work for a little bit something. Now, they did a really interesting setup here that we saw today, later in the regular trading hours, where you have an attempt to shift volume lower, which is the orange. You can see here, these orange bars. They're attempting to shift volume and price lower. But in response, buyers showed up and prevented that drop from happening. Now, that is bullish in the very short term. The funny thing about this, not funny, but like the interesting thing, I guess, is that it takes a lot of energy to do that move, that little Z, that orange bar followed by green bar. It takes a lot of energy. So what you can do is, once you see that, we know that that needs to hold. Especially when they do it twice in a row like this. That level needs to hold. Otherwise, if we get under it, all these guys, like I said, it takes a lot of energy to do this, to turn it around, because they tried to short it, and the buyers, and when I say energy, I mean like more buyers, right? Like conviction, volume, aggression, right? Like all of that. It takes a lot of strength and momentum to push it higher. If they get under it with volume, like they just did right here, chances are these guys are trapped. Now, we also have this pink background here that started pretty early in the rotation. So I would technically have to put my line in the sand here. And if we trade under that white line down there, it's definitely bearish, right? Because we've now trapped all of these guys. But I can tell because these guys put in this attempted momentum shift and they traded underneath them. I know already that we're bearish. I just can't do anything about it because we're at yesterday's point of control. And there's going to be signs of aggression there, even though there's not a momentum shift. So I don't do anything here because of the location. And you can see that if you would have shorted any of this, you just get eaten alive. And that's just the way it goes. We're still too close to the point of control to be trusting that these moves, that the order flow that the algo is looking at is meaningful, because a lot of this is order flow due to the fact that people put their orders in yesterday. The one place where the most people put their orders in was right here. So when we return to that, they're going to rebalance, right? And it's not going to be clean. It's going to be like test under it, test over it, test it, bounce, test under it, right? So all of these signals that are so close to the point of control are potentially going to be invalid. And you can see this is a perfect example where we actually get under that attempted momentum shift, and they just bounce right back through it. Now I will say that is a sign of bullish momentum, right? So when you can take that back, now here's another one: orange bar, green bar. If we weren't near the point of control, I would say getting under this and rejecting it would be bearish. Now in this case, they did get under it, but they did not reject it, right? They just traded right back up to it, probably because it's the point of control. There wasn't a signal there to go short, but had there been, I wouldn't have taken it because of the point of control. Okay, we get under it. Now, can we reject it? Right there. That is the rejection with aggression. It happened at the point of control. I'm not going to take it, right? But it is technically an entry. And you can see that it tries to work. It tries to come back up. It does not take them out. And it triggers again with aggression. And they roll out, right? So just because we don't trust all of the signals near the point of control of yesterday, it doesn't mean they're never going to work, right? But if this exact same setup would have occurred anywhere else in the chart, I'm going to hammer it if I see it. When it happens here, I know that there's a chance that I'm going to get stopped out, so I usually skip them, and that's what happened here is I skipped it. Now, see this arrow that's blue? It's on a down bar, and what that means is that it's another momentum attempt at shifting momentum. They did the other way here. That was brutal. It's gonna be used the same way. It's basically bearish, just like this is bearish. But if they can get above it and they reject it and they go higher, all these guys will get trapped. So let's see what happens. Now, technically, it's not bullish until it gets back up here above this purple background, right? It's got to go through the point of control to be bullish now. What are the chances that's going to happen? I mean, the point of control tends to be a magnet. It probably will, right? So I'd be prepared to sell my long if I got back to the point of control, and I'd have to be getting in on a bounce off this white line. It's not very good risk reward, and like I said, it's just it didn't set up the way I wanted. Now it did work. You can see it came up, bounced. There was no algo signal there. I wanted a sign of aggression here, a volume anomaly, something. I didn't get it. So it got to the point of control. 2 bars later, it rejected. Makes sense. It's the point of control. It's going to do all sorts of whippy things around there. It gets back underneath this white line, but with a purple bar. Guess what? This green bar that closes back above it is a great entry, assuming there was no point of control there. Unfortunately, the point of control is going to cause it to be kind of choppy, right? And they reject just before it and take it out. So this is why we don't usually trade around the point of control. Now, this was the open right here. We were like basically right at yesterday's point of control. So there was, even though it's set up, right, it did set up here, it would have taken you out and then rejected back. Now, it did not give us a trap. It didn't come back to the last apex. So it didn't have a high odds entry. And it was at point of control. So anybody in the room who follows the rules was not short into the open. And like I said, that's okay. right? That you can't catch every move, and that's all right. So this is our new line in the sand. It's a blue bar on a blue arrow on a bearish bar, and they can't get over it without either printing pink bars or rejecting. So this is our first short, but it's within 5 minutes of the day, so I did not take it. You can see it tries to work. It gives you, maybe gets your risk off. They put a bunch of aggression to try to hold underneath this white line, and they failed to do so, but it's pink, so let's see. Now they've gotten back above it. Now it's bullish. It's not an entry, it's just bullish. They reject off of the low volume node, and they can't develop anything here until they get underneath it. Now we've got a star, right? We've traded above it, below it, above it, and then they've tried to get below it, and they came back with a star. It's a very aggressive entry. I would prefer the trap, right? Because we've traded over this apex, traded over it, right here. So now any pullback with if you can get a trap, oh, and this is the low, right? This is the low, power bar, or apex to the upside, break it. Now, any star, any green bar, any 2-bar combo, those are aggressive trades. The best trade would be get underneath this or get underneath this and immediately trap back in. Some in the room did take that star, and there's nothing wrong with it. It's just aggressive, right? Your primary target is point of control, but you get some of your risk off at the LVN for sure. I would not be bearish here because we've gotten over that power bar. If we do get lower than this, I'd be looking for a trap back in. Here's the green bar. That's your second aggressive entry. And you can see that that one tries to work, and then it stops out, and it does not trap back in, and neither does that. Now, it's still not bearish until it takes out this low. And so any of these can trap back in. So if we get 1 bar, then it comes right back like that. This is the entry most of us in the room took. That's a valid entry. Now it got us a little piece, and then it gave it, and then took out runners, and that's fine, right? That's okay. It takes out the low, nothing to do. Now this was just before. This was within the first hour. So many of us expected this to do a little bit more, and it didn't. And one of the reasons it didn't work is because of the timing. Trading in the first hour is going to increase your stops. When you get it right, the potential for a quick payoff is bigger. But yeah, it is a little bit risky. Usually, I wait the first 15 minutes. As soon as I have a directional decision figured out, I will go ahead and take the trades. But you can see how choppy that open was, and that makes sense. And it was also quite slow, and that makes sense because it's FOMC, right? So we really shouldn't be expecting huge moves. It's usually pretty balanced and choppy, just people rebalancing. So not surprising, right? So now let's erase the lines. Now that we're past 9 o'clock, by 9 o'clock right here, now everybody in the room can pretty much trade. Even the brand new traders can be pretty confident taking a trade as long as it sets up on process and that it's not at the previous day's point of control. And that's above us now. So the fact that we traded up to the point of control and rejected should give us a bearish tilt in general. Additionally, we get purple background, right? On my charts, that means that someone tried to push the market hard to the downside right here. If we can trade above him, we can get a bounce. Now, let's look at the low a day. It's right here. Have we traded below it? No. We traded above the power bar, the apex. So that means if we trap back in, or if we trade underneath this and then bounce right back, it's technically a long. It does not trap back in. It can't get the yellow line above this white line, which is the bar that has the purple background. And when it, on a bullish bar, when it does get it above there, they sell. They sell, right? So there's nothing to do there. It's just important to recognize that there was an opportunity for a trade to set up that you would have had to be ready for to the upside. It just didn't trigger. You didn't lose any money. There's just nothing to do. Now, the other thing I noticed is that this yellow, so whenever you get these yellow arrows on my charts, whenever I see the yellow arrows, and they're on bearish bars that have lower highs. So this one had a higher high. That's potentially an immediate entry because it's a trap back in of the other bar. But generally, assuming it's not a trap, usually higher highs are not that impressive. But if you can get one of those arrows to show up on a lower high, that's actually pretty bearish. You can see this blue one on a bull bar is the exact opposite. So again, like this by itself, not that bullish. But if then we went higher and we put a higher low in and we put another blue arrow in, that's bullish. So in this case, we have yellow arrow on a bearish bar, right? Observe, balanced. Then we have yellow arrow on a balanced bar with a lower high. See that? This high at the apex is lower, right? So this bar was associated with this wave, right? And the high here was lower than this one. That is bearish. So if you wanted to start looking for bear trades, that's where you do it. And again, just to, I know it's confusing because this is there's so many signals and you don't obviously need to know them all, but the newer ones I know a lot of people aren't familiar with. This is how I use it. So again, I'm talking about these arrows here. More than one way to use them. Number one way, if we get an arrow, we trade immediately behind it and immediately come back with another arrow. It's almost always an entry. Unless you're like fighting the trend and it's ridiculously strong momentum, it's usually going to work. It's got to be right away though. That's the first potential short. Then the next one is if you put in a yellow arrow on a bearish bar, then you make a lower high and you get another one. Now that's bearish. It's not necessarily sell immediately, but it's look for opportunities to sell, because what it means is that they're trying to push momentum to the downside, and that's not always bearish unless you're successful. So to be able to get a yellow arrow that then puts in a lower high that doesn't get beat and instead they increase momentum to the downside again, it's a sign of follow through. Think about it that way. It's not that important that everyone understands what they mean. Just know that when you get that pattern where it's high, lower high, and then you see the arrow, it's probably going lower. And so where do you get short? Well, you can use a single sign of aggression. So a yellow star for bearish, selling aggression is yellow star, orange bar, or a red diamond. All of those things are sell aggression signals. The more you have in like a 2 or 3 bar like series, the more aggressive it is. And yeah, there's other ways to find higher, to increase your odds. But in general, if you already know your direction and you're just like, I just need an entry, where should I enter? What does the algo say? Just look for orange or stars or the diamonds. On the opposite side, if you're going up, right, it's green or white stars or white diamonds. So those are just the inverse. And like, as you can see here, when you put in a higher high, a higher low, and you get a sign of aggression, the next move is usually higher. It doesn't mean you're going to break this, but aggression at a higher low is usually bullish on that tiny time frame. So if you're scalping and you see this higher low come in, you can buy here, but then you know right here that you're done buying and you should be looking for shorts. And then your very, very aggressive short would be there. And then you could wait for it to trap back in, or it goes behind it, comes back. There's another yellow arrow that's got a lower high. That one has a star. You could immediately get in there. Sure. Right? And like I said, just one blue arrow by itself is not a trend reversal. That's just like cannon fodder, basically. They're putting a bunch of aggression in there, and the chances are they're not going to be able to do anything. That's another entry, right? As long as you know you're short, you just keep taking them. Like that's that's the hardest part about a system like this, is that there's so much information and you have to decide ahead of time. What do I have to see to do it? How aggressive am I in this situation, right? And then you need to have criteria for when you stop doing that, because if you keep doing that, like let's say you thought it was bullish for some reason and you did the exact opposite, right? When it started, I got the signal that it was bearish for sure here, but we already had signs that it was bearish on this first entry. So let's imagine that from this point we bought every single bullish aggressive signal. You're not going to do well, right? You'll buy this, you'll get a little something, and then you'll get stopped. Same with the green one, right? The red arrows were warning you, but let's not worry too much about all the signals. So that one's not an entry by itself, so there's nothing to do. And didn't signal there. There we go. So green. So that would be an entry. That one would probably stop, right? So eventually, and then that one would be an entry. The star with the diamond, and that one would work. So you'd maybe get down to like 40, 60, let's say, right? I'm not saying, I guess I shouldn't say everyone fails. It depends how close, how much momentum there is. But if you instead got the direction right and you just took every sign of aggression to the short side, you'd have 1, 2, 3, 4. None of those stopped. 5. 6 wins before a loss. And then you take 1 loss, and then you short this, and you make it all back and then some, right? So like as long as you get direction right, you're good. But figuring out direction is one of the hardest parts of this game. And so that's why, because you can do all that, you could figure out the aggressive signals with just this system, right? The system that we use in the room does not have all the added things that I've added to it. It's a lot simpler. It's just the signs of aggression and the channels, basically. And then the pivots. It doesn't have all of these extra things added. So as long as you're good at reading which direction we're going, like if you knew that we weren't bullish, here, let me put, like, let's say you, obviously sometimes they're both going to work, right? You can buy green and you can sell stars that are pink, and either way you'd be fine. But once, let's say you saw this and you're like, okay, we're clearly not bullish because otherwise that star was a higher low and it should have bounced, right? So if you stopped buying there and you just instead started shorting, doing a download, I guess. Instead, if you shorted that and then shorted that star, right? And then shorted that star, okay, you'd lose that one, right? So maybe 2 to 1, like, right? That's still pretty good. If you got 2/3, 75% win rate going the right direction, that's pretty freaking good, right? Now, where it gets tricky is when the direction is not so clear. And then you could either take every one, or you have to wait for higher odds setups, like the traps. So a good example is there's an entry right here, because we got broken power bar, trapped underneath this, within 1 bar, came back up. That's a very high odds entry, and it has components in it that help you figure out what direction we're going in, but not set up like algos that trigger and signal visually, right? I have to draw those lines. So I've added things like the arrows and the backgrounds and the diamonds to help me figure out, do I want to be bullish here or do I want to be bearish here? So like, let's take, like I said, 9 o'clock, for instance, where we were before I got on this rant. If you just use the purple backgrounds and that's all you used, and you were like, okay, I'm gonna do these entries. I'm gonna take shorts on orange bars and stars to the downside, and I'm gonna take longs on stars up and green bars, but you were only gonna take them in the direction that the purple or pink pivots told you to. Well, then you would know you're short here, even if you didn't have these arrows, right? Or any other extra signals. All you got is the purple backgrounds and the pink backgrounds. You would know right here, like I said, that if you got above that with volume, that you're no longer shorting. Well, you couldn't do that. You got above it with volume, they sold off with price. Can't get volume on price above, that's an entry, right? Now we have more purple pivots, more purple backgrounds. Okay, can they get volume above that on a bullish bar? Only on a pink. What does that mean? If they reject it, it's bearish. That's an entry, right? You don't need all that extra stuff. And then when you see them, now you might miss this buy, you might not buy it, but look, they're still underneath the purple pivot. That's technically a sell. And that one would stop if you had your stop there. But you can see that they still did not get the yellow bar above this without closing to the downside. See that? When every time they got the yellow line up there, the bar closes at the bottom, and then over here they closed on the top with bar up there, but it's pink. So it's still bearish. Yes, this stopped out, right? Because the location wasn't very good. It's right in the middle of this chop zone, but it's still bearish. So you'd get back in here, and you'd need to know that if you were taking this aggressive play at the lows, you'd have to commit to the direction. And the only way I can commit to the direction is if I have rules. So my rules say I can keep being short as long as we can't get volume and price above this. Well, we got price above it, not volume. We get volume above it, not price. Get price above it, not volume. Get volume above it, not price. They signal to the downside. Am I bearish? Yes, short. Right? And so, do I miss this? Yes. I don't get that long. I could take it, but my target is here. Risk reward is a little bit less than 1-to-1. I'm usually going to skip that. Everyone else in the room will take it. I will skip it because I'm just more conservative. You could also say, well, why wouldn't you take this when you have LVM there and a voodoo range level? I agree. Like, it does look like a spot that they might bounce. I'm not going to guess, right? So if you had some other reason to get long and you saw this trap back in and the star and all these other signals and the level was right, sure, give it a shot here. My problem is I have another system saying that chances are if we can't get above this, we're not going any higher. So balancing that information and deciding whether or not I want to take this for 15 points and get out, or do I just skip it because something like it's going to stop out sometimes. It's very rarely going to get above this. The way I usually handle that, just to keep my sanity, is I keep one direction until that direction is invalidated. So in the trade and perform room, they're taking this long and getting their 15 points, and I'm missing it, but they're probably not shorting this because they were long. And instead, I might miss out the 15, but I miss all this. So, hold on, let me just kick somebody who's being an ass real quick. Let's see. How do I do that? Oh, I know. I go here. Sorry, guys. Give me a sec. I've got to block somebody. Child abuse, pornography. Here we go. Report. And report. There we go. He should get banned for a couple days. All right. So, so anyway, yeah, I can stay bearish as long as we can't get volume and price above these purple backgrounds. So here, I'm not taking that trap. See, technically, if you were aggressively looking for long traps, oh, never mind. That one got 2 bars, so that's nothing. Nothing to do there on the long side. What I see is arrows showing up on lower highs, purple background that we can't get volume and price above, short. Now, we get a blue arrow here, so if we can get above that, it can become a pivot to go higher, but I'm not bullish until we do so, right? Now my line in the sand goes here. They do try to shift momentum with the arrow. They get pink bar, green bar. I believe this one works, but it would be really aggressive to take it because in my opinion, because we haven't gotten above this high. And all of these channel lines and the POC, MAs, they're all pointing down. So the chances of this just V's back up is pretty low. But could this be the low? Yes. I need a high odds entry, right? The purple bar, green bar underneath the channel is pretty good, above 50%, but it also fails sometimes. So this one right here, I'm no longer bearish for the time being. We've gotten over a purple background, but notice we've got other purple backgrounds in this same wave to get over. So it's not bullish, it's just neutral. So it does V back. So someone who was aggressive and bought this would do pretty well. Now, this is where it gets tricky. This got me bullish, right? And what I wanted, we broke over a power bar, right? So I can now buy traps for the upside. The question is can I short? And the answer is you could, but let me show you where you'd want to stop. If you've got a single purple background like this, and you get volume and price above that on a bar that's not pink, this one's pink, so you're okay, then you would not want to, like this, you do not want to be bearish there, right? Because it didn't set up long, but once you've gotten that, you got to be a little careful. So if they can get back up there again, it could go higher, but most likely it's done. So I could short here as a scalp. Now, that's not a trap, but it is a low. If I can trap below that low, I can get it set up for long, and it just does not set up. This one, I just don't have a way to catch that. I know it did signal. Okay, I do. It's really aggressive. It's after you see them break a power bar, putting in a new low, you buy any aggressive sign. That's how you catch this. Pretty tricky. And look at all these pink bars, right? So this is into the FOMC. Remember, this was all really slow bleed. So FOMC is about to come out. There's no way I would trade this, but you can see we got pink get put in. So now we can put, now the lowest one, the one that started being pink was this bar, but it went lower than that. So I need to see it get under that with volume and price before I even think about being short. And notice they test underneath it and jump back up with a bullish signal. This is 4 minutes before FOMC. There's no way I'd take it, but technically it's saying bullish, right? And it does explode to the upside, and that's pretty cool. Now you put in a bunch of pink bars here, which means it's really not bearish unless it can get under this. That anything other than that is just neutral. So they get arrow to the upside. Now that's interesting because that means if I can go a little bit higher and trap some people up here and then roll over, that would be my point line in the sand. So we're going to change this to red because that one, it's only good if we can trap buyers above. So let's see what happens because it's an attempted momentum shift. And when they first try to do that, it usually fails. Oh, look, they put in another pink bar. Great. Pink background. And then went away. There's our new line in the sand. It's green, right? You could technically buy in the same sense that you could buy the star. This one's purple bar star, so it's better. But in the same sense, you could buy this diamond if you think it's bullish, and we did have reason to think it's bullish. Then you could also buy this, but notice you're buying right into a low volume node, and they reverse at the voodoo range level. So it's like it's a little bit iffy. Then what do? They come back with pink bar star. Again, I don't think it's bearish yet, so I'm not personally taking that. It did trap back in. See that? Within one bar, it got behind this one, came back with a star. It's technically a short. It's a very aggressive short, and a short I'm usually not taking personally unless I have reason to think it's bearish. So then I don't take that. I know it's technically a trap back in, but it's way too high up. I want to see some sort of a retracement now, because my target is back up here. This one had a purple diamond just like these ones did, which means that there's some volume anomalies happening up here. This is all because of the Fed. So none of this really means anything. This all happened within like 15 seconds. But just to show you what actually happened, they gave up this level where the pink was, and they gave up the red. Oh yeah, right. They couldn't get volume and price back up above this guy. So they immediately rejected. So that actually makes a lot of sense. So they reject out of it. You do not buy this. They're clearly, selling it off. And I wouldn't be a buyer until they broke a power bar, apex to the upside. So I'd miss all this, even if it was slow. There's a power bar to break. Notice it happens right at the LVN. If you're a location trader, those have been working really well lately. But, for scalping. And then this one, now look, we trapped back in. And we had an arrow, but this one doesn't have an arrow. This is the very first arrow, so I'm usually not selling that, just because it's not enough evidence. If I put in a lower high and I get an arrow like that, that's usually okay to sell. Not this time. That one stops because it's 30 seconds after the FOMC, so that one doesn't work. They're clearly bullish if you didn't notice already. Now, we do have, actually, we have a sign of, so we put in a low, we put in a power bar, we broke that power bar, see that, and closed above it, and then we developed a apex to the downside, trapped underneath it and came back in, this is the best long I've seen all day. So even though this one was technically a short, if you thought it was still bearish, although it's trapped in between these LVNs, so in either case it's kind of sketchy. But now that we've broken apex to the upside and then trapped back into an apex on the downside, that's what's known as a supernova, and that can create huge extensions like that. Look at that. So on the way up, we had an up bar that had a yellow arrow. So this one gets red. And if we can trade above it, like we did, and then fall back below it, we can trap all this excess. It's basically a sign that anything above this is excess. Notice we go back to the yesterday's POC. That makes sense. And then notice what happens. We put in one pink bar, pink background disappears. We get an arrow, an orange bar, star, everything, right? If you were looking for a short, that's your first sign of aggression. It's right at yesterday's POC. I'm personally not going to take it. It's also 50 seconds after the Fed release, so I wouldn't touch it. But I wouldn't touch anything in here because it's near the POC. But notice that the green bars did give you buys, and the orange bars did give you sells. So it still works. It's just impossible to actually execute. But it's amazing that even near the POC, things were working more or less. This one stopped. And then notice that they put in an orange bar and immediately beat it with the sign of aggression. So if you were bearish, you don't want to be bearish anymore when you see that. And they just can't, the bulls just can't get anything going. They're getting totally squeezed, right? Okay, arrow, right, on a star. Nothing yet, but a pivot potentially. Can they get back up there? Oh, they just let it go? No, here we go. They've got a wide range. Okay, so what we really want is for this to get tested and then see them come back, trap back in with an arrow again. Otherwise, putting in an arrow on a lower high would work as well. We put in a high, we broke a power bar. Technically a trap here could work, but it might take 2 tries. Yeah. See, this is the problem with the shorts. You're gonna have to try it once, twice, or maybe this one, right? It's not as easy. You don't get as smooth. It's like almost, you have to try like twice as many times to get the short to work. And so the long's just easier. Doesn't mean you can't short. It's just, you got to be willing to take it a second time. All right, we get a little choppy back inside of this level that we said was important from way back when, right? We're orbiting around it. So we basically want to see if one of the sides can decisively take it and like rip off of it. Okay, there's our lowest arrow, right? We had one way up there. This one's really far away, but it's associated with this low, which is technically lower, right? So you'd think that that's probably bearish. This one happened above it. I'm sorry, it should be bullish here because you've traveled above. Oh no, look, we can't get a bullish bar. So this is the arrow, right? The high associated is here, which is a lower high. And we can't get volume above it. So if you immediately short it, which you're not supposed to do, you'd get stopped out. But if you said that that looks bearish, as long as it stays bearish, your entry's here. And you get a scalp. And you get a drop back in. So here, arrow, right? Drops back in. It takes 2 tries. The one with the arrow is always going to be better. So if you were conservative, you'd wait for that one, and it stops. And it's still 6 minutes after FOMC. They're not all going to work. Pink bar. Okay, this is cool. Pink in the background, right? Pink in the background disappears. Then we get pink bar followed by star. So potentially near the resistance, and you've got a guy putting momentum into the upside way up high, and then an aggressive seller attacking him. You could be aggressive and take it, but I really want to see this get taken out with volume first, which happens right there. So now I know sells might work. Now, if you were aggressive, you would be already short. Otherwise, you'd have to wait for the pullback. Notice it comes back into the LVN, traps back into this one. So that could be a buy for a scalp. It's technically a buy. At location, trap back in, volume anomaly, volume shift up. It's a buy. Now, we still expect this to hold. There's our lower high with an arrow. See that? High, lower high, yellow arrow. That should be good. We said we got underneath the pink with volume. This one you can still scalp back up, but as soon as you see a sell signal, you want to reverse. So I'd be short here. Like I said, I don't trade FOMC during the like 10 minutes, but like after the release, I'm not touching it till after he starts talking, at least, preferably when he stops talking. But it's interesting to see that if you were fast enough, those signals still worked. So here's another lower high with an arrow associated with it, right? Again, you wouldn't know that until here, but any bear signal now should be good. Here's another trap back in. So if you wanted to look for bullish opportunities, it's got an arrow to trap back in, but look, lower highs and the shorts are working. So that one does not work. And we got a high that broke underneath a power bar, of apex. See, high, broke underneath the apex. It means bear moves are going to be easier than bull. So I wouldn't take that, but it is technically valid. If you're looking for just bullish trades and you're okay and you're willing to take aggressive shots into bearish momentum, it's technically valid. I don't do that. Back to POC, so I wouldn't buy that because this would be my target, by the way. If I would have shorted, the target's POC from yesterday, always, if possible. So notice we put in purple, so now it's bullish if we can get above this. Have we traded underneath that important spot? We have not. So we're still up in the excess zone. Remember, on the way up, we had a signal on the way up down here that anything up here is potentially excess if they can trap them. So look at all this potential excess on a higher time frame. All right, all this, if they can get back below that. So here's our very last thing of purple. The very first one was up here. So let's use, it's technically the first one that matters. We do trade volume and price above it. Technically, I'm usually looking for buys now. So purple bar, green bar is a buy. Let me catch that. Still only 12 minutes after the FOMC release. This was a trap back in that failed. That's interesting. Was there another, no, arrow, lower high, no arrow. No, that one just turned around. Like I said, it's fed. So, but we rejected off of that same level, the purple background level. Whoopsies. We rejected off of it right here. It's distinguished by a white line, right? That's where the momentum started getting bearish. Here, right? So trading above it with volume generally sets a buy order, but getting under it and rejecting it like this is bearish. So that's a sell technically. It's pretty aggressive, but that's a sell. And then we're back to the LVN again. So, but again, we've got point of control here. I'm out of any short, and I'm not going to buy this. But you can see that sometimes it still works. There's that aggressive volume shift, and they can't get under it. So when they put in orange bar, green bar, and they can't get under that, don't fight it. This is squeeze, right? This is all squeeze. Okay, another sign right here that if we get underneath this, we could trap with excess. Go up, pink goes away, no sell signal. All right, we get underneath that important spot right here, put volume below it right here. Let me get rid of some of these extra lines because they're not all useful anymore. The important ones are the red. So we've gotten underneath it. Now I'm looking for sell signals. Not surprisingly, they don't come back up and give it to me right away. I'm not going to buy this. I want sells. There. Pink bar, orange bar, right at the volume anomaly. That's perfect. That is perfect. Right as Powell's starting to talk, notice we get a lower high and then an arrow. So guess what? Any setup now to the short side is going to be good. So let's see right there. Aggression to the short side should go lower. Not much. Wow, they get back over the excess point and they squeeze them again. Bastards. This is FOMC. They trap this guy. See that? Do not fight. Now the pink started here in the same spot. Right here. And then we had another one here. So let's see. Pink bar star. works, but they can't get under this red. Pink, purple bar, green bar, bullish. It's going to fail. Pink bar, star again. Looks bearish. They get underneath this one with volume. Clearly bearish now. So they tried to get up. They gave it up. Now we're back underneath that line in the sand, and it's over. Now notice they're putting in excess points here. So if they can recover this with volume, they could fight this guy again. But as long as we stay under blue, it's over. It's bearish. Wow, they just give you no chance to do anything. It just absolutely rips apart all the way back down to POC. Bounces once again off that LVN, which seemed to be very important. This would be your next short. Pink bar, orange bar. This one also had a VPOC box, so even more reason. So did this one. This is another short. Wow. Like I said, he was talking at this point. I'm not touching it. There's a momentum shift to the downside. Oh, another red line in the sand. So we're going to move this down. So now excess selling. If we can trap traders under here. Okay. Notice there's no apex here. We get pink bar, orange bar, and then they get pink, pink, pink. There. They get over the line in the sand with a white bar. I would not want to be shorting anymore. I would be looking for buys, preferably on a pullback. Trap underneath this, perhaps. Right there. Trap underneath. Give us a star. That's a long. And it fails. Oh, it's underneath the low. It's not a long, I guess. It's gotten, see, we gave up this red. I guess it would only be a long if it can hold above that red. Once it gets back below that line in the sand from way back, this one's from way back when. Like this one, we haven't beat yet. So sell that when it rejects it. Oh yeah, we didn't get over this one. I was confusing them. This is the old one. So we got under the old one. They reclaimed the old one. They ran into this one and rejected it. So your short is basically here if you're aggressive. Otherwise, it just doesn't set up unless they come back and test this. Nope. So there's the short. Is this the one I took? No, I don't think so. Pink bar, orange bar, short. Pink bar, star is technically a short. Notice we can't get any bars that are white or green above the first bar with the purple pivot, the purple background. Right, so this is technically a short, but it's aggressive. It immediately stops out, and they get over this. Right? They have another one to get over up here. Otherwise, it's neutral. Look how they can't do it with volume. They can't get volume above it. That's a sell. That's a sell. See, on the short side, sometimes it stops you up by like 2 points and then comes right back in. You have to take it a second time. On the shorts, there's no question. You must. Must. Does it always work? No. There's your lower high. That's orange. That's a sell, I think. There's no arrow, though. Another trap back in. So they trade above it. Fall below it. Right there. That's a short. Wow, they made this freaking tough. There's a, so, low, break a power bar. Any traps to the upside should work. Oh, I missed that. I missed this. Trap back in. Got a new low. Broke a power bar to the low. Trapped. That's a long. Okay, so that's why this was so difficult. Because this is technically a long, even though we're underneath that level, so it's pretty hard to be committed. But they're going to chop in there until one side or the other loses. And in this case, they got behind this guy and it was over. Right? So one of those situations where buys and sells both worked, but only in a small, for a small time. Eventually they consolidated so tightly that one of them had to break, and they got this volume anomaly and a sign of aggression, and they just ripped. Now, these big moves out of this consolidation, if they get given back, it's often lights out. So here they get a pullback green bar. That's another buy if you're bullish. Yeah. And there's no reason to fight this because we can't get them underneath this. So now it's got to get underneath this or even underneath this one to really think it's going to be bearish. Oh, wow. They got underneath this. They try to trap back in and they fail. See that? That's not very good for bulls. So that's the first sign of some weakness because those traps should work if it's bullish. Do they try to trap this? There's no setup to get short, really. Not a good one. Okay. They set up here. That one works. Wow. All the way back up again. And they trap on this. So the traps were working in both directions if you were quick. See that? Trap, short. No trap there on the long side. Oh, it just went. So this is at point of control, so pink bar, orange bar doesn't do anything. Nothing to, don't trade the point of control from yesterday. This one, voodoo range level, pink bar star gets 5 points, 10 points, and then reverses. Now the trap comes in. Trap back in, orange bar, probably good to go. But again, only bearish if it can get underneath this bar. So it's a long way to go. They do it. Oh wait, they didn't, not with volume. Nope, they're gonna try again. Back up again. They didn't get it to the they didn't get the volume below it. Okay, so yellow arrow on a bull bar. If they can trap sellers above this, I'm sorry, if they can trap buyers above this, big trouble for buyers. Wow, they just reject it. They need to get above that and trap some buyers up there. Nothing to do. It's right at POC. Off the LVN again. Oh, pink bar, orange bar at the POC. They don't get back up there. So they just leave it. Wow. Sits at the LVN for a while he finishes talking. Now, it put in a new low, right? This old low. No, it didn't. So if this was the low and it breaks a power bar, technically, all of the long traps should start working now. So let's just see. Are the long traps working? Nothing set up, nothing set up, nothing set up. This is a long trap. This is probably a long trap. Let's see. By like two ticks. So that's a long. Until they take out this red. That's not good. Arrow at a lower high. That's definitely not bullish. They trap one more time. That one works. See, the traps work a lot. As long as you're going in the right direction. But sometimes even when you're not. So this is at POC, but it is pink bar star. And it gets... So we got back up to POC one more time and they just rejected it with an aggressive seller. And it never came back. It got underneath this low and it was over. Now the lines in the sand have been gotten through and they reject out of it. See that? Reject, reject, reject. All of those are sells. Because once you know the direction, once you see this rejection, you know you're bearish. So all of those orange bars and stars on the downside can be sold. Sold. Right? Here's your new line in the sand. If it gets above this, they can trap sellers. They just can't do it. Wow. They just can't do it. So that's technically a trap back in that gets sold. That's a sell. And again, if you do take these, you have to be nimble. They put in a low. Here's a power bar. They break the power bar. Right? They got closed above it. Now traps to the up. Traps. Bullish trap should work. In other words, trap under this. Trap under this within one bar. Let's see. Right there. Trap. Trap. There it is. Got a little something. Not what. There. Yeah. See that? So traps underneath gets you an extension. This is a trap to the upside. That's a sell. especially when it's got an arrow. No trap there. That's another trap, but there's no arrow, so I wouldn't probably take it because it's the short side. Yeah, it just kind of struggles. That's a trap. See that? That's a trap. But yeah, yeah, okay. So it works. Here's a trap with an arrow. See that? So this one should work. Apex, trade behind, trap back in with on 1 bar, print the arrow, sell. Here's the apex, trap behind, come back in, buy. Trap behind, come back in, buy. I don't need the arrows to the long side as long as I've broken over an apex. So still bullish. I've not taken out the low. No trap, just a green bar. That's probably still a buy. Star, still a buy. All those are buys still. I bought calls somewhere in here, thinking it might go back all the way. And then they get to this anomaly. They trade underneath. So the first sign of weakness was getting volume. See how they get price below it, but the yellow line can't get below it unless that's a purple bar. So there's no concern there, but right here, we know something's up because they've put in momentum to the upside here, and yet they've gotten volume and price below it. So something's not right. There's no sell signal here, really. No clean sell signal. No high odd sell signal. But we're trading right at Friday's low. See that? So they're probably going to fuck around with that. And then there's your first sell signal. Pink bar, star. And that one goes. And I believe this is the one I took. The orange bar I took. And I might have taken this one. And then I think it was this one I took. And then it broke through it. And I exited like here. And then started the stream. And then it just dropped 100 points. It might have been, was it this one? I thought it was lower. You know what? It was this one. I'm wrong. I don't know how I missed that one. That one was obvious. This one is the one I took. I think I missed that. And I was like, okay, as long as we can't get volume above this, we're good. And what I should have seen is as long as we can't get volume above this, we're good. Once we put that one in. But instead I started the stream and just exited. Thinking like, well, I got a little something out of it. That's okay. And then it went down for another 100 points. So just goes to show, it's not done. It's not over till it's over. Notice here's that momentum shift again. Green bar, orange bar. Again, it's a sign of weakness, sign of bearish pressure. But if you can get back over that, they can get trapped. Now you don't want to be buying here, in my opinion. But this is technically a trap back in, right? But we haven't broken out over any apexes to the upside, so I'm usually skipping those. And then let's see, does this act as resistance or not? It does. See how we can't get the yellow bar, the yellow line above the white line? And when we do, it's either pink or it closes bearish. So that's a sell and a higher time frame than the pink background trade. That's a sell. Pink bar, orange bar. All that's bearish. You don't buy these traps unless you're really aggressive. This is technically a sell. Very aggressive. No buys, no buys. No one's trapped. Can't do anything here. See, every one of these purple backgrounds, the bar high of the purple background, if you watch the yellow line, anytime it gets above that white line, it trades lower or it closes pink. See that? So now, again, any sign of aggression to the downside is a sell. So it's still bearish. That's the answer. Is it's bearish as long as it can stay below like 10,960 or so, and even if it does get up to 10,960, if it then rejects it, it's bearish again. So there's really no reason to be bullish here on this time frame. And again, we can go back to the higher time. Here, let me just get rid of all these lines. You can go back to the higher time frame. And you can see what happened there is on the higher time frame, which again, you can't really trade, but you can get directional ideas from. So real quick, beginning of the open. So the open was up here. We sell off to the POC, chop around the POC. Or no, I'm sorry, that was Tuesday's open. Here's today's open. Right. So up to POC from yesterday, reject with speed. They put a bunch of volume up here and they tried to trap them. We had a sell signal here. They couldn't break this low, so the buyers showed up. All right. They broke up, apex to the upside, so now traps can be bought. Or aggressive signals like purple bar, green bar can be bought. Here they trap back down with the arrow. That one's a scalp. Stars should still be bought, right? It's still bullish technically. That's another trap. That's a sell. They get underneath all of this pink. See all this pink they put in? If it can't get under this, it's just balance. See? Once they get under this, right there. Well, actually here. Once that happens, it's not going to hold up there. It's going to, or at least it's going to go down for the time being, right? Drops it here. That rejection is what I would expect. Usually that would reject to lower. They turn it around on FOMC. They get over the purple. See that? They also had a purple background there. So that 11,330 areas, 11,320, let's say, is a really important line in the sand. It was repeatedly support and resistance. 11,320 matters a lot. Pink bar, orange bar gets a little bit of an extension, and then they bounce. Sell out of 11,320, sell signal. Some volume getting shifted up, aggression, rollover with volume. That's a line in the sand right there. If we can get price above, it is 11,070, let's say. If we can get price back above 11,070 somehow, we could trap shorts. That's what has to happen to trap shorts. We have, so these little arrows are signs of absorption. It's very normal to trade through them, but what you really want to see is whether or not they act as support or resistance afterwards, after trading through them. So potentially we could get some sort of a bounce developing down here, but unless we can get all the way back to 11,070, it's still bearish. And really the line in the sand is 11,320. Under 11,320, here, let's look at it in this before we go. So 11,320 was the orbiting level here that was support yesterday, right? We traded over it and we rejected it and we couldn't get back to it. So really before this entire thing looks bullish, we're either going to need to trap shorts down here, or we're going to need to build our way back up and somehow take back 11,320. If we can't do that, then it's bearish or it's neutral in this area. And the higher time frame, sorry, there's a lot of lines. You can see that this entire thing is balance, right? Every time we come back into this area, we've been getting responsive buyers. They could get responsive buyers out here again, or they might take out one of these lows and trap back in, right? That happens on this time frame too. See how you put in a low, you get under the low, you trap back in, roll over, right? We haven't had a true trap of a low on NQ for a while. So this one traded below. So if it bounces here, it could be a trap off of the Thursday low. And then where would that go? Well, you look back to where the volume was on that way down. So to figure out your target for a long, we're potentially trapping back into this one, right? That low. That down wave started here. And so the target is 11,320. Look at that. That's where the POC of that down wave is. See that? Exactly 11,320. So clearly 11,320, 11,320.50 is your pivot. That is the area to watch, is that area. I doubt we'll get there in a day, but in the next week, let's say, if we can see the market get back to 11,320, we may see more decisive directional decisions. Until then, I would trade bearish under 11,260 and bullish if we can break 11,400, let's say. If you wanted to try to take these in like scalp level to level, I think it's fine. But realize that the higher time frame is bearish, and if there's signs of aggression, that they're probably going to roll it over. In the very short term, buyers need to take back 11,070 to have any chance of turning this around and trapping off of this level. But the 11,000, right? Yeah, that level is really important because of the Friday and Thursday close. We really do need to take those back immediately. Otherwise, if they act as resistance, expect us to go significantly lower. But I would assume that there's going to be some responsive buyers in here. We will probably renegotiate 11,000 overnight. And by London, if we can get back above 11,070, we might head back towards the 11,320 important pivot. I would not be shocked to see that not happen right away. We might need another 5 to 6 days before that happens. It could go lower before it goes higher. I don't know if the low of the year is safe. It's just bearish until it's not, right? I'm not going to try to guess. But if they can hold this 11,000 level through London and we open above it and bounce off of it, 11,320 is definitely my target, and I would buy I would be a buyer intraday because the buys are just easier. If that can't happen, all we can do is just keep scalping down and selling the whole for short-term gains. But yeah, as far as I'm concerned, this was my target on any short, was this general area, the 11,0950 area. That's the target for the short. So it's like, I can't really short down here, but on a swing trade basis, I can't really short down here. But could we easily come back in here and bounce around down in like the 10.08 area? Totally, right? We have a purple pivot that's been untouched at 10.750. There's all sorts of reasons why we can go lower, and that should be our assumption for now. But neutral in here makes sense. It's not bullish unless we can take back first 10.970 needs to be taken back right away. 11.170 needs to be taken back right away for any chance at a bull move tomorrow. Let's put it that way. All right, hopefully that was helpful, you guys. That's how I go through my day. I do this every day. If you want more information on the algo or you want to trade with us in the room, Simon's chart looks like this. It's a lot easier to learn than mine. I've been working on it for a little more than a year and building on it. But if you want to join the room or you want to come get a free pass, just email Simon. It's trade, the letter N, the word perform at gmail.com. So trade N perform at gmail. Otherwise, just DM me on Twitter, Red Ben Trader, and I can answer your questions and get checked up with Simon. Hopefully this is, like I said, been useful, and keep trading the process, guys. I will see you next time.